So here's what just happened in crypto and why it matters. You might have missed it, but something big went down this week that says everything about where this market's headed. Let's talk about the Ethereum ETF and what BlackRock just did that nobody's talking about. Because if you're sitting there wondering if you're too late for crypto or if all the big gains are gone, this week's news might prove the opposite. The headlines all say the same thing. Ethereum ETFs are officially approved. The SEC just gave the green light for multiple spot Ethereum ETFs to begin trading, and they're expected to hit the market next week. That means, just like Bitcoin ETFs earlier this year, people will be able to invest in Ethereum the same way they'd buy stocks through normal brokerage accounts. Sounds boring? It's not. This is a huge deal because this move isn't for you and me. This move is for the big money, the pension funds, the institutional portfolios, the hedge funds that can't touch crypto unless it's wrapped in a traditional investment vehicle. Now they can, and that changes everything. But here's what nobody's really saying in the headlines. BlackRock, the biggest asset manager in the world with over $10 trillion under management, they just made a subtle move that might go completely unnoticed. They added Ethereum to one of their bonds, not in a flashy way, not in a press release. It was buried in a footnote, quiet and deliberate. And it tells you one thing, that they're accumulating. These institutions aren't waiting for the hype. They're not buying the top. They're slowly, quietly planting flags in crypto. Because when the full capital floodgates open, they want to be there first. Let's zoom out. Bitcoin ETFs launched earlier this year, and what happened next? Billions of dollars poured in. Bitcoin hit new all-time highs, and suddenly crypto was legit again. If the same thing happens with Ethereum, and now there are multiple Ethereum ETFs coming, you better believe Ethereum is going to run. We're talking about one of the most battle-tested coins in the entire ecosystem. Billions of dollars in DeFi, NFTs, stablecoins, staking, all built on Ethereum. And now, Wall Street can finally buy in. Here's what's even more interesting. While the institutions are getting in through ETFs, retail investors, people like you and me, are still asleep. Google search trends for Ethereum are flat. Nobody's really talking about it. Everyone's distracted by meme coins and AI tokens. And that's the opportunity. Because the best time to buy anything is when no one else cares. If the Ethereum ETFs create the same supply shock that we saw with Bitcoin earlier this year, that window might close faster than people think. So what does this mean for you? It's not financial advice, but if you've been sleeping on Ethereum, now might be the time to start learning, start watching, start planning. Not just because Ethereum is a solid long-term asset, but because institutions are gearing up to make it part of their portfolios. And when the big money shows up, prices don't just rise, they multiply. Let me be real with you. If you miss Bitcoin under 20K and Ethereum under 1K, you're not alone. So many of us thought that we were too late. But cycles come back. Most people get rich during bull markets, but they get positioned during boring markets. This is one of those moments, so don't sleep. Watch the news, watch the flows, watch what the big players are doing quietly, because by the time everyone else is screaming about Ethereum hitting 10K, it'll already be too late. You won't see it trending, you won't hear it in the group chat, you won't catch it on TikTok. You'll just notice your Coinbase balance looks different. If you want to stay ahead of the crypto curve without the hype, without the noise, you're in the right place. This is Freedom Built Ugly, and we talk about money the way it really works. See you in the next one.